But in terms of the gold exchange and the LBMA, Putin, like many of the things, has known that the West, he's been patiently with modern monetary theory, the idea that you can solve a debt crisis with more debt and then pay for that with mouse click money.
The LBMA, the London Bullion Market Association, which you say has played a role in manipulating and suppressing the price of gold. You're not alone there. Many agree with you, including Russia's finance minister, who says that there needs to be an alternative to the LBMA to counter the LBMA's price manipulation, as he puts it. Now, as I mentioned at the top of the interview, Russia is proposing its own international standard for gold and other precious metals, the Moscow Gold Standard. And Russia is claiming that creating the Moscow Gold Standard is critically important for normalizing functions of the precious metal sector. I'm quoting the finance minister there. And the move, of course, is in response to Russia getting banned by the London Bullion Market Association as part of the sanctions against Russia for its invasion of Ukraine. So if Russia does, in fact, launch this alternative to the LBMA, how significant would it be if they succeed?
Well, it's a fascinating shift. And as we talked about before this interview, one of our colleagues and advisors at Matterhorn, Grant Williams, he came out with this, and we talked about this back in February, March of 2022, that what happened with those sanctions from the West was as big a watershed, not only in the currency markets and in now going from a mono currency or a world reserve currency to a multinational currency system, but also in terms of precious metal pricing and the petrodollar. There's been so many ripple effects of those sanctions, so many failed consequences of a failed policy. Again, not taking pro-Putin stance, but it was an absolutely myopic policy. It'll have a massive effect on the gold price because, again, whatever you think of Putin, whatever you think of a war, none of us are in favor of war, seeing civilians killed because of the ignorance, egotism, or needs of powers. But the simple effect is, Putin may be many things, but he's a chess player and a judo master. He's not stupid. He and Xi and China and Russia have been waiting for years for the pretext to reorganize the chess table here. They've been waiting to diminish Western influence, NATO influence, and the US dollar's influence on the European continent in general and the Eurasian continent in particular. Where gold falls into this play is, in addition to seeing what they think is the bullying of a U.S. world reserve currency, which has exported its inflation all over the third world and in the BRICS and in Pakistan, Lebanon, Argentina, Sri Lanka, all these countries who've been bullied by the U.S. dollar are looking for new partners, and they're looking for a new system. And part of that is looking for a new LBMA or a new gold exchange, because Putin and Xi and others are very much aware, like anyone who trades precious metals honestly knows, that the LBMA market and the COMEX and the OTC market and the forward contracts leverage is an artificial, legalized way of repressing the paper gold price. So it's not normalized pricing of gold. That's not a conspiracy theory. I even knew this before I became a gold bug or gold interested. When I was working in Wall Street, we all knew this. But in terms of the gold exchange and the LBMA, Putin, like many of the things, has known that the West, he's been patiently with modern monetary theory, the idea that you can solve a debt crisis with more debt and then pay for that with mouse click money, was once a fringe concept in the US or in the West. Now it is mainstream, and it's an absolute insult to the notion of money as a store of value. Now it's just a medium of exchange. Russia and the East are thinking, no, we like things like fertilizer, gold, and hay and hard assets. And they're saying we need to reprice and normalize the pricing of the LBMA market. It's one of the many sins of the West that they want to correct. Now, whether they succeed or not is another question, but it's no coincidence that the Moscow World Standard has popped up in addition to everything else as we de-dollarize, as the petrodollar gets diluted by other exchanges and other trades, that they'll do the same thing with the gold market because it is real, it is a monetary metal. And so the Russian finance minister is now proposing that these Eurasian banks start creating their own standard for gold, that these committees come together and they bring in, whether it's an aggregated or monetary national unit, they're going to reprice physical gold more fairly. Because Putin knows, like everyone else knows, that the LBMA is an open joke. It's legalized use of leverage to artificially repress the gold price. So again, when you look at 8 LBMA banks effectively having thousands and thousands of levered contracts short, when most of the market is going long and the gold price is repressed, that's not fair gold pricing, regardless of whether you're a gold bull or not. And one of the things that the East in general and Putin in particular wants to do is compete on this level too. They've seen the US and the West bully and use the world reserve currency to force other countries like Argentina to have a 70% interest rate to try and pay back their dollar-denominated debt. Well, now they want to also be the good guy when it comes to gold pricing and real assets like gold. It'd be very interesting to see that. If you were to use the Moscow World Standard now and where they're pricing gold in rubles, that would have the dollar equivalent of gold at about 2,500 right now. So they're trying to, again, show that they're going to be a more fair, more equal, more normalized standard, because natural supply and demand has been destroyed by criminal levels of leverage at the COMEX and the OTC markets. And so it's not a surprise at all, in addition to every other ripple effect, from the world reserve currency to the declining influence of the West to the declining power of the US dollar, inevitably, that they want to come up with a new gold exchange. And again, whether it's successful or not is to be determined, right, but it's not a surprise.
Well, that's just the point that I want to see you try and address, is how likely is it that it can be successful? Because they do seem to be galvanizing a lot of support. We've got President Xi Jinping meeting with President Putin just this week. The finance minister of Russia says he wants to make membership in this organization attractive to all market participants, especially China, but also India, Venezuela, Peru, other South American countries, as well as Africa, of course, in order to, as you say, destroy the monopoly of the LBMA and provide for a stable development of the precious metal sector, as he likes to say it. Now, it feels like the LBMA has been around forever, but it's only been around since 1987. So in that grand scheme of things, if you look at it, something could surely take over. Do you think that the Moscow gold standard can actually succeed?
I think it has real potential for real legs. I mean, 60% of gold is produced on the Eurasian side of the continent. 70% of that gold is refined in Switzerland, where I work, but most of it comes from the zone that's going to be under this new Moscow World Standard. And you have to understand that Russia's largest non-energy export is gold, or production. So it has a vested interest in seeing gold more fairly priced. I think all those countries that you've listed that aren't friendly or necessarily under the influence of a bully like the US government or the US market or the LBMA market in the West are looking for any pretext to push that bully out of the playground and finally have a fair exchange of their marbles. The kids want to play fair with their marbles. The LBMA and the West have been bullying them for decades. And so if the Moscow World Standard can create more fair pricing, countries that have been bullied and beaten by this LBMA market, who haven't seen a fair price discovery of the gold they mine or the gold they produce or the gold that they save, are going to be more than eager to turn their backs on the LBMA market if there's an alternative. Again, that is a slow process. But again, to the point that Grant Williams made, I think what happened in 2022, this first quarter, was as much of a watershed as what happened in August of 1971. So many changes are coming, and they're not going to be. There's no going back. The genie doesn't go back in the bottle now. Even if there was peace tomorrow in the Ukraine, the world has already seen that Russia and China in particular, but all these other emerging market, or if you want to say third world economies that have been beaten down by US dollar debt and beaten down by mispriced gold, are going to be more than eager to try and find fairer pricing and a fair monetary standard. It'll be very interesting to see how the LBMA reacts if we do have a Moscow World Standard that is giving higher pricing to gold and more fair pricing. They're going to react unfavorably to an LBMA that continues to use margin and leverage. I also think the fact that we have rising rates right now, banks that are 10x levered in the US, the big LBMA banks, or European banks that are 20x levered, will use rising rates to delever. They have to delever. European banks, when they had negative nominal yields, couldn't delever. Now they can delever. So that will contract the derivatives market in general, which has been expanding since 1985. As the derivative market contracts, even the LBMA market will contract. We have a real chance now, after many years, to see somewhat better fair pricing of this completely disingenuous LBMA market. So it'll be a very interesting next few years if this becomes real. I don't see any reason why it won't become real. Russia has
but your timeline anticipated for this?
Gosh, I mean, again, I'm predicting it's not trying to escape responsibility. It's such a mug's game. It's such a mug's game. What the French finance minister do, how they'll get these Eurasian central banks to cooperate, how they'll price it, whether it'll be an aggregate or country by country monetary unit, will be interesting to see. It could be within 2 years or less. And even if there's peace in the Ukraine, I don't think these changes can be stopped now. There is a sense, they say in German, ich hab die Nase voll. When you're fed up, at some point you break. The camel, the last straw.
Right.
The rest of the world is seeing an opportunity for fair pricing and less Western hegemony, whether it's NATO in general, the US in particular, or Western currencies in general, the US dollar in particular. The rest of the world is saying enough. And I don't think that's going to change now. And America has to be ready, not for the end of the dollar or the end of the world or the end of the US markets, but they have to be ready for the end of an era where they could dictate policy, dictate currency, and even dictate false artificial pricing, or even manipulate supply and demand in the commodities market. So I think that will be fascinating. And the combination of a declining dollar, a contracting derivatives market, and a rising Moscow world standard is going to have longer term impact on the prices of gold and silver, which have been held back for far too long. And again,
Right.
to us, gold is just is just insurance for dying currencies. And whether it's at 1700, 1600, or 2200, long-term investors don't mind because they see the end game here, and gold will hit much higher highs. It's, again, not a gold bug comment, just common sense and watching the geography and the history and the math of currencies play out in real time right now, which is incredible what's happening this year. Incredible.
And as